You all know the fairy tale about the tortoise and the hare? I'm a tortoise. I even look like a tortoise. But I feel totally vindicated about preserving my clients' money during a terrible bear market. It's not how much money you make in a good market, because everybody's smart in a good market. It's who survives the bear markets, who has money left over to buy the great companies at great prices at the bottom of bear markets. That separates the men from the boys.
For more than 20 years, Mark Hofrichter's MDH Investment Management Incorporated has been providing solid, conservative, productive strategy for a growing number of satisfied clients. A primary reason for its remarkable success is that MDH is not afraid to chart its own course, even when that means defying conventional wisdom.
I like to buy what everybody's selling, and I love to sell what everybody's buying. And it doesn't get any simpler than that, but it's very hard to execute. I like to buy straw hats in January. I'm a value investor. The first thing I ask myself when I buy a position is, how much can I lose? It's not how much can I make. I like to buy low-risk, high-reward stocks, and that usually leads me toward high-quality companies with strong balance sheets that are having temporary problems and that are temporarily depressed and totally out of favor.
Another key to MDH's success is a firm belief that, contrary to popular opinion, you can time the market. But it's not based on a series of lucky guesses. It's the result of thorough research, careful analysis, and the ability to remove the emotional component from the equation.
Emotions are very strong, and fear and greed are the two main emotions in investing. And that's why I never make investment decisions when the market's open. I always think about and make my decisions when the market's closed, because I think it eliminates a lot of the emotional components to buying and selling.
By reading the signals, recognizing the symptoms of overvaluation, and knowing when to move out of equities, MDH has demonstrated remarkable acuity in protecting its clients from catastrophic market downturns, like the one that shocked many investors in the autumn of '87.
I read a quote from an analyst from Merrill Lynch who said, "Making money in this market has been as easy as picking apples from a tree." That was the line. I'll never forget it. And I was looking for a market top. You know, market had been going up on a straight line since 1982. So the first day I got back to Ohio, I sold about 2/3 of my stocks. This is August of '87. Those of you who don't have gray hair or bald heads, do you remember what 1987 was like, the crash of '87? It was really scary. The averages went down 40% in 2 weeks. I get the statements at the end of the month. My clients are down like 4 or 5% for the month. And I'm thinking, you know, that's end of my MDH Investment Management Inc. Well, guess what? I start getting letters from my clients. "We are so grateful that you sold 2/3 of our stocks before the crash. And we took a little bit of a hit, but nothing like my neighbor or my friends."
And during the extended bear market that began in 2000, MDH clients not only survived, they prospered.
The year 2000 was a turning point, and I said things are just wildly overpriced. This is going to be worse than 1987. This is going to be like 1929. And, you know, 29, people jumping out of windows and stuff, remember that? And everybody looked at me like I was crazy. Well, guess what happened? We had this terrible bear market. I mean, terrible bear market. My clients did really well. They didn't lose any money. They actually made money during that same period.
Among MDH Investment Management's firmly held beliefs is the conviction that mutual funds offer little or no protection against the ravages of a bear market.
Mutual funds do not protect you in a bad market. And mutual funds are what the public has been sold like there's no tomorrow. There are 6,000 equity mutual funds. There are only 3,000 stocks on the New York Stock Exchange. 6,000 equity mutual funds of various types. And the thinking is mutual funds are diversified, and this diversification will protect you in a bad market. Well, guess what? When the market went down like it went down in 2000, 2001, 2002, mutual funds, they went up when the market went up, and when the market went down during a 3-year crash, they went down just as much. If you look at Fidelity Magellan, or if you look at the Vanguard S&P 500 index funds, those are the 2 biggest mutual funds, for the last 5 years, they're still down total return. They're showing negative returns for the last 5 years. My clients have doubled their money in the last 5 years.
Another MDH rule to live by: don't take a round trip on a good stock. Adopt an aggressively defensive position, and never let a small loss become a disastrous one.
The first rule of investing is don't lose your money. The second rule of investing is don't forget the first rule. What I'm most proud of is I never let a small loss become a major disaster. And this is the Achilles heel of most investors. They let a small loss become a major loss. I never let that happen. And that's why I'm still in business, by the way. And that's how I sleep at night.
Of course, perhaps the best way to judge a financial consultant is to ask his or her clients. What do Mark's clients have to say about him?
I'm very happy talking to Mark, probably once a week, sometimes even more frequent than that. Not so much to know exactly what he's doing, but to know what he's thinking and what directions we plan on going. I like to have an idea of what's happening without having the direct knowledge or the involvement in managing the funds. It's sort of like maybe Monday morning quarterbacking, but for me it's been an enjoyable relationship because Mark is very open to sharing his ideas and to giving me really a heads up as to where he thinks things are going to go, and Mark has been wonderfully successful at what he does. You buy management, you're really buying the person, and there isn't anyone I know that has as much integrity and and honesty in his dealings as my friend Mark. I've been fortunate to know him, and even more fortunate to have hired him to manage my funds. It's been a wonderful experience for me, and it's a wonderful experience for my family because of the security that's provided for us.
Clearly, Mark Hofrichter is someone who cares about his clients and who takes the role that he plays in their lives very seriously.
I took a general anesthesia residency with my uncle, Dr. Mannheim. That name might ring a bell with some of you. After I graduated from dental school, I used to give general anesthetics. And I used to think that was the ultimate responsibility. Breathing for someone, you have their life in your hand. I used to think that was the ultimate responsibility, but I was dead wrong. The ultimate responsibility for someone is managing their money. People don't like to lose money. And I feel that I've fulfilled my mission for my clients over the last 20 years.